For some of the pre-market movers, let's bring in Jenny Horn, the co-host of Next Gen Investing. Good morning, Jenny. Happy Friday. So the future is pretty flat right now in terms of the major averages, but Amazon, we still have 20 minutes to go before the opening bell. Amazon poised to be a loser today following this report. We knew expectations were high, Jenny, sitting very close to all-time highs, and it doesn't seem like Amazon could really clear the bar. Fill us in.
That is correct. And I will say that this move is not as perhaps blistering to the downside as what we've seen. And now some of it's losing peers like the Microsofts, the Alphabets. I mean, it's down about 3%. But actually, like Microsoft, Amazon is really echoing that it cannot keep up with AI demand. So a good problem usually to have, but not really being read through as such. So they did warn investors they could face some of these capacity constraints in their cloud computing division, despite plans to invest $100 billion this year into AI, data centers, homegrown chips, and other equipment to provide these AI services. Just for context, Alphabet's capex now for 2025 is around $75 billion. Microsoft's is around $80 billion. So that does put them at the high. And I believe Meta is also like 60 to 65. So this is a pretty eye-watering number. Collectively, the group of tech that we've already heard from is expecting to spend over $300 billion on AI this year, which is up 55% from a year ago, which is just incredible. But CEO Andy Jassy did really highlight big spending on the company's edge and cloud computing services, still warned, though, that growth could be lumpy, and hinted that Amazon could be facing some of these delays in getting their hardware and not having the sufficient electricity. There's also concerns that of course, do rival Microsoft. So some of these supplied chips that are really third parties, as well as Amazon's own chip design unit, have the power capacity that are really limited by the ability of AWS to bring their new data centers online. Those constraints are expected to start to ease in 2025. So we did see them spend about $26 billion in capex in the last 3 months of 2024, a majority of which went to AI AWS. But also, Andy Jassy did say that the amount was totally reasonable given how much the company plans to make now in the new year. AWS revenue did jump 19%. That was its third straight period of 19% cloud growth. So not a dip, which is something that we didn't see from Alphabet or Microsoft. But also, we do know that a lot of times these right now growth constraints can really overshadow a fairly strong holiday quarter, especially for their e-commerce business, which was able to fend off competition from Walmart, Temu, Shein, some of these discount peers that were a threat. So shares down slightly this morning, but AI definitely is expected to weigh on profits. That's not an Amazon-specific story. So I can understand perhaps maybe the neutrality regarding this report, but not a huge morning of selling, at least not yet, as far as Amazon's concerned.
Yeah, futures only pointing to declines of maybe about 3%. And you know, given the fact that it was so close to all-time highs, it's really not all that much. I think that weaker than expected sales outlook, talking about the strong dollar too, could be weighing on shares. I'm curious what the analyst community is saying, because I was taking a look at my feed and there are so many price target changes from the analyst community who are largely bullish heading into the report. But what are they focusing most on?
Yeah, so I've seen, I mean, amazingly so, nothing but really price targets to the upside. Like you said, I mean, there's so many, not to go through them all. But right now, street high is around 306, I believe, and average is around 251 based on some of these morning upgrades. So that does give us some upside. There is no more name, though, that frankly has stronger conviction in the bullish camp from the sell side. I mean, we have 72 roughly analysts that cover this name, and 68 of those have a buy or a buy equivalent. There are no sells, no underperforms, and not really any major downgrades I could see this morning. It seems all just like we're slightly updating price to the upside, which is not a bad place to be from the street's perspective.
Yeah, I mean, I did see a few price target cuts, but overall, definitely still a bullish analyst community. Also want to ask you about Affirm, because while Amazon's response may be a bit muted, Affirm poised to be a big winner following its report. Fill us in on those numbers, Jenny.
And, you know, I'm not even surprised that we're seeing this pretty substantial move. I mean, jumping 15% this morning after we saw better than expected fiscal second quarter results. I'm not surprised, though, because this name trades with volatility, and we haven't really seen that same volatility really trickle into shares on the year, as this name has been not flat by any means. I mean, we've pulled back about 1.4% this year, but looking for this next catalyst, and it seems as though we got it. So we did see gross merchandise volume was around 10 billion, topping the average estimate of around 9.6 billion, surpassing 10 billion though for the first time. Now, GMV, which is really the key metric that helps gauge the total value of transactions, rose 35% from last year. Revenue also rose another 47%, and their revenue less transaction costs jumped 73%. The margin of around 4.1% for that one component of their revenue also came in ahead of their range at around 3 to 4%. And their CFO did say that these earnings were really boosted by that $60 million gain in December when the company did repurchase some of its convertible debt at a discount. However, he did mention that the primary business fundamentals were still their driver of the quarter, outperforming on adjusted operating income. Bottom line profitability was a metric that they also right now are highlighting. So there's good things. They also said for the current quarter, they expect between 755 to 785 million, or about 770 million at the midpoint, versus estimates of around 772 million. So that might be the weakest figure you can find. Their consumer base grows 23%. I mean, double-digit growth across the board for most of these major metrics, which for a company now as mature as Affirm has come, I think it's still frankly impressive.
So what's the read-through, do we think, about the consumer, Jenny? Because this one's an interesting one with the buy now, pay later component, because one might assume that it could mean a weaker consumer because they don't have the money to spend right then. But was there any input in terms of how the strength of the consumer, if you will? Because I guess if they're continuing to spend, they have something.
So, okay, if you read like some of the earnings commentary and some of the commentary from management, you would think the consumer is strong. But I agree with you. I mean, anyone that understands this business model knows that you're not typically, and again, I can speak to personal experience, you're not typically using buy now, pay later when you're cash rich. I mean, you're doing it because you're basically needing to finance your purchase, which again, I have done many of times. But I think that more of their growth speaks less to the consumer, more to the expanded ecosystem. So they do have these major partnerships like Apple Pay, also Amazon, Shopify, and I think that's becoming more like a PayPal in the sense that they have such a wide merchant catalog, really. They're available to everyone. So I think now we're seeing more and more of that growth driven from the fact that they're more available to consumers, not that consumers are necessarily utilizing them more, if that makes sense. So I don't read this company as necessarily a huge positive on the consumer. Yes, you could say the consumer is spending, but spending while needing to finance that spending doesn't exactly point to a cash-rich position. Right. Okay, well, Affirm poised to be a big winner today. We'll keep an eye on it. Jenny Horn, thanks for breaking down those movers for us. Thanks, Caroline.